Hey, everybody. Welcome to Hump Day, Wednesday, NVIDIA Day. I think it is NVIDIA Day. Can everybody hear and see me okay? And thank you so much for being here. I see Brad and Kevin. This is like, for those of you that remember a show back in the probably 70s, it was like Sesame Street on PBS, but it was called Romper Room. And they would say, I see Brad, and I see Kevin, and I see Pete, and et cetera, et cetera. Anyway, just going back to my youth. But yes, today is NVIDIA Day, folks. And before we get going here, awesome work. Before we get going here, come on, everybody, give me a smash, give me a like, all that good stuff there. If you can do that, I would be very, very, very appreciative. Okay. Market, what's it doing right now? You know what? Ahead of earnings, S&Ps are up about 10 points. NASDAQ is up just a teeny bit. The Dow's up a little bit, just kind of hanging in there. NVIDIA is basically unchanged. But happy NVIDIA earnings day. That is Jensen Huang. That is the CEO, founder of NVIDIA. So just wanted to kind of put that in here because this is what everybody is talking about. And speaking of going back to the 70s and back in youth and heyday, who remembers the show Sanford and Son? Red Fox, and anybody remember this? Chips. Okay. Well, his thing was always, Elizabeth, it's the big one. Well, today is the big one with NVIDIA. So these are just some of the headlines, literally just over the last few minutes, actually. Okay. Some of the expectations here. Okay. What they're, we don't have to go through what earnings are expected. Bottom line, it's going to come down to what is their guidance. But I thought this was really interesting when you put it into a numbers perspective. With the amount of outstanding shares there are in NVIDIA, and with the expected move that is factored in, the market is expecting a $260 billion move, one way or the other. One way or the other. Okay, and we're going to go through that expected move here, in a moment. But revenue and growth, okay, it used to be through the roof. Now, they're still doing really well, right? Some of that, though, has moderated a little bit. And there's obviously concern with what happened with one of their chips, the Blackwell chip, commentary on what they may do with China. So again, it's not really going to be about the results. It is going to be, what do they talk about guidance? Okay. Now, what's in a number? Anybody have any idea why I have these numbers up here right now? They're very, very consequential to NVIDIA. I'm waiting for some answers here. Even if you don't know what it is, let me know and say, I don't know. Okay, there's one of them, Kevin. Yes, the 14%. NVIDIA makes up 14% of the NASDAQ. Okay, NVIDIA makes up 7.5% of the S&P 500. And this 35% here, okay, 35% of the S&P companies are tied to AI. Okay, that means so goes NVIDIA today, so goes the reaction to the market. NVIDIA has such a weight in the overall market. Okay, so I wanted to point this out because it is so incredibly important to understand the correlation, the beta, if you will, between NVIDIA and the rest of the market. Okay, let's break it down, everybody. That's why you're here. Let's break this down. Okay, we're going to go through scenarios here, whether you're bullish, bearish, or neutral going into earnings here. Okay, so before we break that down, here's a chart. Okay, here is a 1-year chart of NVIDIA. Okay, obviously, if we just follow since Liberation Day, not unlike many other stocks, it's been a straight rocket rocket. maybe that was a little Freudian slip there. Oh my goodness, straight rocket ship up. That was not intended for anybody there. Okay, if you look over a year though, you can see a lot of sideways trade up until Liberation there. So what do we expect? What do we expect for NVIDIA? All right, let's bring in first an option chain, and that's going to show us the expected move, which then we can back that into that $260 billion we were talking about, that the market may move depending on this. Okay, if we look at the expected move here, we've got an expected move of somewhere between $13 and $14. Okay, does everybody see that? Okay. Now, let's say we take that number, okay, and we're looking at the number of outstanding shares. Okay, there are about 24.6 billion or so outstanding shares. So if we take 24.6 times the, let's say $13 expected move, that's actually greater than 260 billion that I had put out there before, which I grabbed from a Bloomberg article this morning. So I have to look exactly, let me see here. Let's see if we can get a better number on the outstanding shares, because we know the expected move. It's got a $4.43 trillion market cap. So I guess if you take 4.43 trillion and divide that by what is $182, 243 million shares. Pretty close. I'm sorry, 24 point. Yeah, that's right. Okay, so we are good there. So we're pretty close to 24.3. There we go. So we're pretty close to what that article had said about the market move. Now, everybody may have their own opinion. I'll bring in another graph here. Okay, here is a 3-month graph. Looks really darn bullish. 6-month, pretty much just as bullish. Again, here was Liberation Day right down here. Here's the 1 year. It's a little bit different. So I am not going to suggest to anybody right now whether you should be bullish, bearish, or neutral. In fact, for the most part, I'm going to stay away from playing NVIDIA on earnings here. But you're here to see what you could possibly do. So I'm going to throw it out to you guys. First one that answers. I don't care what the answer is. Okay? I don't care what it is. Bullish, bearish, neutral. What do you want to go through first? The first answer that I see, that will be what we're going to evaluate first. Bullish, there it is. Okay, we got a lot of bulls out here. So if we have the 182, okay, this is what I'd be looking at. 182, the current price. Let's call it plus 13 for the expected move. Puts us at a target of 195. Okay, so with a 195 target, let's keep that in mind. Let's look at a couple possibilities. Okay, so I am just going to put a few possibilities up here. So this broken wing bullish call butterfly that expires this week, so very, very short term, right? You're definitely playing this just for earnings. This is pretty darn good here. Now, because the price is pretty cheap on this, what I'm going to do is actually lower my strike. Rather than targeting the 195, let's do it targeting 192.5. Make it easier to get to. Okay. This you could buy for about $1.90 right now. But if we use the pure expected move up to 195, that broken wing fly was pretty awesome. This is a $10 wide broken wing fly. I don't like that as much. So if I was going to do something bullish where I didn't want to take into consideration vol for a calendar, a diagonal, strangle swap, which we can do also, this is probably a position I would take if I was bullish. Okay, if you bought this at $1.60, okay, your reward to risk is phenomenal on this. This thing could be worth $750 at its max. So if we take $750 minus $160, we get to potential profits of $590. $590 divided by $160, which is the maximum we're risking, maximum we could lose, is about 3.7 to 1. Okay. Now we can look at just a plain call spread. You could look at selling a put spread, whatever it is. This to me, again, this is to me, if I was bullish, this is a strategy, a situation that would make perfect sense to play out. Okay, everybody with me? Before we move on here, I'm just looking, market is the S&Ps have ticked up a couple points since we started here. Okay, everybody with me on this? Again, no recommendations here. No signals coming out, just things that we're going to go through. Okay, let's look at a similar type position for the bearish side. What are your options? I don't like trading a strangle. I will trade a strangle swap. I don't like trading a strangle. Too much risk for me on the premium levels. We can look at it. I don't like it. Again, strangle swap, selling this week's strangle, buying next week's, much like we have in a few other positions, absolutely. Okay, Surya. My analysis does not suggest anything. Again, we went through the charts here. Short-term chart is certainly bullish. Longer term, maybe not as much. So I am not suggesting for anybody here to be bullish or bearish or neutral. We're just going through potential strategies for those scenarios. Okay? Before we move on, let's get our word of the day out there. Yeah, it had to just be NVIDIA. And I used Jensen Huang himself as the presenter of our word of the day today. So we will leave that up there. Okay, there we go. All right, let's go now back to the option montage. Let's do the same calculation, same rationale for a move to the downside. We know that 195 was the target to the upside. If we take 182 minus 13, we're going to be targeting the 169 area, or the 170-ish area on the downside. Does everybody follow that? So let's look at the same type of setup. A broken wing put butterfly here. Okay. Very similar. Maybe trading a little bit higher. Okay. But even if you were to target 170, I know the expected move number is 169, but we'll choose a strike that is right there. So even if you were targeting 170, okay, and you paid 175, let's not get confused between stock price and the spread price. So even if you paid 175 for this, if you were bearish, your reward to risk on this is still about 3.3 to 1. That is still pretty darn good as well. Again, we can certainly look at other setups, but we always want to look at, expected move, then what is the reward to risk? Okay. Does everybody understand that setup there? 1 by 2 by 1. If you paid $1.75 for this, which is targeting 170, you get a 3.3 to 1 reward to risk. Pretty darn good. Okay, now, what if you thought the report's going to come out and the stock's going to remain fairly neutral, somewhat range bound, not going to maybe move outside of the expected range. You don't have a bias whether you're bearish or bullish. Okay, what kind of position would we look for then, potentially? There we go. We look at an iron condor. Okay, so the way that I would do that, again, knowing that our expected range okay, the expected range on either end, 169 up to 195. Okay, so let's take a look at maybe this, and then maybe this. And I didn't choose $7.50 wide strikes for any reason than just that's what I chose. You can look at $5, whatever you want. Okay. This $7.50 wide iron condor is trading for about $3.40. Okay. Let's say you were able to sell this for a credit of $3.40. Okay. What is your risk on this, everybody? What is your risk? If you were able to sell this at $3.40, no, that's not your risk. If we were buying it for $3.40, that would be the risk. But in this case, we'd be selling it at $3.40. That's not your risk. What is the maximum value that this spread could trade at? There you go, Kent. Clive, there you go. The maximum value, if either the stock went down enough where both options on the put side were both in the money, or if the stock went up high enough and both call options were in the money, okay, $7.50 wide spread on either side. So that puts at a risk of $4.10. So in this scenario, we could make 340 to lose 410. That's 0.83 to 1 reward to risk. We would typically like to see that closer to 1 to 1, meaning we would like to see a credit on this closer to 375, which would be 1 to 1. So I personally would not trade this because I am a very, very huge proponent of sticking to the reward to risk metrics that we know that over time is what we should be looking for. So I wouldn't trade this. Now, I might look at something else. I might look at something else that is a neutral-ish type trade, like a strangle swap, which can be. Now, that takes into consideration adjusting implied volatility and that whole conversation that we've had numerous times of IV crush. Okay. Is there any other strategy, any other dissection for NVIDIA you would like me to walk through right now? Cost of call and put broken wing total is 335 if you did them both. Probably don't want to do that. At that point, if you're playing both sides, Pat, you'd probably rather do a strangle swap or a double calendar, which is a strangle swap. Clive, you want to look at a calendar real quick? Do you want to look at a calendar call spread or a calendar put spread? If I was going to look at a calendar call spread here, sticking with the expected move of 195, okay, we're going to lower this implied vol there. And then we would look here and we would lower that to about here. So that 195 calendar call spread cost about 65 cents. Okay. From a dollar standpoint, really cheap. But is it cheap from a volatility standpoint? Well, let's see how this looks. Okay, that is another way to be a little bit more conservative on an upside play, but the 195 calendar call spread looks pretty darn good this week to next week at 65 cents or so. Now, Clive, we can do the same on the put side, since that's what you want. And we're going to use the 170 strikes on those. because that is the expected range, expected move on the downside. And that's going to cost us pretty similar, 70 cents, nickel more on the put side. So 70 cents and an expected potential P&L on this. Here's your window right here, a little bit tighter than it was on the call side, but still, you know, if you're playing with the odds of the expected move, pretty good. Pretty good to buy that for 70 cents. All right, everybody. When we get back into the rooms, if there's another scenario or whatever you want to take a look at, let me know. Okay. Hopefully this gave everybody some good insight, some proper insight into potential opportunities based on your analysis and your bias of direction. Again, regardless of whether it is earnings, whatever stock it is, whenever it is, it's imperative to not get caught up in FOMO and to make sure whatever position you're putting on offers you the right reward to risk. Personally, I'm a no-go. I am a no-go. Okay, if we get a drop in NVIDIA down to basically the expected move area, down to 170, which also is the 50-day moving average, okay, I would probably dip my toes in there tomorrow and look for something for a bounce back. All righty, folks. Here's the NVIDIA wheel for the day. And we've got a winner that is going to be Troy, Ty, Valerie. Who's it going to be? It is going to be Ty. Ty, who is on the sidelines watching the fireworks. I know you're still here, Ty, and I think you know the drill about shooting me an email, right? Awesome. Awesome. All right, everybody. Thank you for our NVIDIA day here. Again, if there's something else you'd like to look at, Kevin, I know you want to look at the strangle swap. We'll do that back in the room. But if there's something else you guys have a question on, want to look at, let me know in the room. Really appreciate everybody here today, and we will see you all tomorrow.